Well, there's been a lot that has certainly happened in the third quarter, and particularly the whole year. Trumponomics, the Federal Reserve, emerging market turmoil, whether it be Turkey, Argentina, or South Africa for that matter. Oil prices going up, down, and staying sideways at some point. The Brexit negotiations reaching no end, despite them saying that they see an end in sight. Those were clearly the biggest drivers of financial markets throughout the third quarter of 2018. What is it that is going to drive the fourth quarter? Is it going to be much of the same? Lukman Otunuga, market analyst at FXTM. Your thoughts, is that going to be the same case for the fourth quarter?
Thank you very much for having me here today. Yes, the third quarter was certainly quite exciting for financial markets. And as we move into the final quarter of the year, there's a strong possibility that the main drivers that we saw moving financial markets last quarter will be the primary drivers in this quarter. Primary oil prices, Brexit negotiations, especially the events in the United States with the midterm elections coming up.
Yeah, I suppose many will then look at, the role of things like Trumponomics and possibly that being one of the bigger factors, because that's played into trade wars, that's played into currency affairs, that's even played in the oil markets with Donald Trump saying, he certainly wanted OPEC to ramp up production so that the price goes down, and they're saying no, we're certainly not going to do that. Donald Trump believing in one side of that Brexit negotiation and possibly not helping in aiding that process. So a lot on that Trumponomics factor.
Yeah, I agree with you. Trump has actually been one of the key players in financial markets this year. Very interesting indeed. With the whole protectionist rhetoric sparking risk aversion, fueling concerns about global trade war, we've seen that ripple effect actually impacting sentiment and even emerging markets. Looking at oil prices, yes, Trump has repeatedly lashed out at OPEC to raise output, but funny enough, we've seen the complete opposite with OPEC and Russia simply rejecting Trump's demands and oil prices trading higher. Looking at the outlook for oil, though, we're starting to look bullish in the sense that what is driving oil, it's a combination of geopolitical risk factors. So, funny enough, Donald Trump has already imposed sanctions on Iran, which are scheduled to come into effect on November the 4th. So once this happens, the fears of global supply dropping are likely to push oil prices higher.
Yeah, if those higher prices do higher, now we're looking. I mean, it's already at $84, right now. Do we see that now? Looking forward to 90? Are we looking at that? And we're looking at records we saw probably 3-4 years ago.
Yes, it's if one was to say that oil prices would trade to 90 at the start of the year when oil prices were so depressed by oversupply concerns, I'll ask the person to reevaluate. But how things are moving right now, there's a strong possibility that oil prices could actually continue respecting the upwards trajectory in the short to medium term. However, I think we should keep in mind that going back to Trump and Trumponomics protectionist policies, if a trade war between the United States and China becomes reality and global growth ends up taking a hit, naturally this would impact demand for oil. So the longer term outlook for oil prices actually hangs on how intense the global trade tensions become with the United States and China.
Yeah. How much of the Federal Reserve's price hikes have we really priced into the market?
So looking at that perspective, I believe that markets have already almost fully priced a hike in December and another 3 interest rate hikes in 2019. But funny enough, even though that being the case, we're still seeing the dollar appreciate. So my suggestions or my thoughts on why the dollar continues to remain at such elevated levels is 2 reasons. Investors remain highly bullish towards the U.S. economy. The U.S. economy has performed very well when you compare it to other major economies in the world. And at the same time, although the final trading quarter has kicked off with a risk-on sentiment based on the Canada and the United States securing the NAFTA deal, lingering uncertainty over U.S.-China trade tensions are going to continue weighing on sentiment in the longer term. And with the dollar, we've seen the dollar become the go-to currency in times of uncertainty. So naturally, if we do have a situation where tensions flare up between the world's two largest economies, the dollar is likely to continue respecting its positive trajectory.
Yeah. And at the same time, then emerging market turmoil, that's something we continue to look at as well. But Lukman, really appreciate your time this morning. That is Lukman Otunuga, who is market analyst at FXTM. Michael Avery joined